What if I told you that you could offer a retirement plan for your employees for way less than you might have thought, and make your small business an even more desirable place to work? You probably already know that offering retirement benefits is a great way to boost employee morale, to improve retention, and to attract top talent. But perhaps you think your business is just too small. But here's the good news. Setting up a retirement plan is a lot easier and cheaper than you probably think it is, even if you only have a few employees. Today, I'm going to tell you how to do it and let you in on some little known tax credits that can reimburse you for most, if not all, of the cost of setting up your plan. And I'm going to tell you a little bit about my personal journey opening up a retirement plan for my employees last year, which I did through the Run powered by ADP platform. And I'm very thankful to the Run platform for sponsoring this video so that I can bring this information directly to you. And make sure to stick around until the end of this video, where I am going to teach you a bonus tip all about stacking these tax credits to make your retirement plan even more affordable. But first, what type of retirement plan should you set up? Now, this is really going to depend, and there are lots of different types of retirement plans out there, so you'll definitely want to talk to a financial advisor to figure out what makes the best sense for you. So there are lots of different options, including your traditional 401k plan, a SEP IRA, maybe a solo 401k. There are many different ones to pick from. Now, if you don't yet have employees, something like a SEP or a solo 401k might be a better option for you. They are typically going to be lower cost and easier to administer. But if you have employees, personally, I'm a fan of the traditional 401k. This is typically what big corporations are able to offer. This is where you're going to have more flexibility in terms of matching or even profit sharing. There are so many things that you can do with a traditional 401k. And because that's what I set up for my employees, that is what I'm going to be speaking more towards during this video. However, know that the vast majority of the tax credits that I'm talking about could apply to various different plans depending on your situation. But the big question is, how do you even go about getting this all set up? And this is one that stops a lot of small business owners in their tracks. And this was me for a long time. I just assumed it was going to be complicated and take a whole bunch of time. And I also thought it was going to be expensive, which I'll talk about a little bit later. However, I had all these preconceived notions of what it would be like to open a retirement plan. And that's especially true because I'm a company that has only 3 employees plus myself. So I really was wondering if it was going to be worth doing. However, I made the decision to look into it. And the reason that I did that is because I have a financial literacy company, and it felt kind of out of congruence to not be offering some way for my employees to build wealth for their future. So I really wanted to be able to offer this to them, even though we're a very small company. So where did I start? I started with my payroll provider. So I highly recommend going to the payroll provider you already use, especially if you are happy with them, and seeing what type of retirement plan solutions they might offer. And the benefit to doing that is it's all in one platform. There's integration already built in with your payroll as far as things like withholding and everything like that. So it just felt like a really natural place to start. So because I use the Run platform for my payroll already, and I'm very happy with them and their service, I decided to start there when looking for retirement plan solutions, and voila, they had lots of options for me. Now, the interesting thing is, even though I'm a CPA, I started the process of looking into this before I even had any idea that there were tax credits available to be able to help me with this. And the more I looked into it, the more I was shocked that this is not talked about more. The Secure Act 2.0 was recently passed. That changed a lot in terms of what's available for small businesses to help them get started offering retirement plans to their employees. Now, really quickly, before we go farther, I want you to understand the power of tax credits versus tax deductions, right? If you are offering a plan and you have expenses related to getting that plan started up, or you're administering the plan, of course, all of those expenses are going to be deductible as a business expense. That is a given. And again, that's generally going to be true for employer matches that you're doing on behalf of your employees as well. And tax deductions are all well and good, but again, all that really does is it reduces the amount of income that is taxable. So for example, when you're talking about a $5,000 tax deduction, that means it's reducing your taxable income by $5,000. So let's say your effective tax rate is 20%, then that $5,000 deduction times that 20% is how much you actually save in taxes. So in this case, about $1,000. Now, that's not anything to sneeze at, and we need to make sure that we are claiming all of our deductions. However, tax credits are the best. As a CPA, tax credits blow tax deductions out of the water. And that's because a tax credit is a dollar for dollar reduction in the taxes you owe. So a $5,000 tax credit actually reduces your taxes by that full $5,000. So when I get all giddy talking about tax credits on here, make sure you know that tax credits are way better than deductions. That's why I geek out about them. So what that essentially means is that if you get a tax credit for something you spent money on, you're essentially getting it fully reimbursed by the government. And this is why the Secure Act 2.0 tax credits are so powerful, because they can essentially pay you back for a lot of the expenses of opening up and maintaining a retirement plan, and potentially even some of the expenses that you have for matching your employees' contributions. So let's get into it. How do you know if you qualify? Well, as with anything, there's lots of ins and outs to it. You could talk to a tax advisor. That's a great idea. But also, I'm going to be speaking specifically to some of these credits that relate to those of you who have less than 50 employees. And believe it or not, some of the best tax credits are available for those smaller companies. Even if you only have 2 or 3 or 4 employees, this would apply to you. Now, if you're wondering if this applies to you, if you are your only employee, well, more than likely, most of this is not going to apply. This law is really meant for those who are opening up employer-sponsored plans for their employees, not just for themselves. So there can be some benefits that you may get out of this. However, importantly, this is really meant for those of you who have employees outside of yourself and likely outside of family as well. So one of the huge benefits is a tax credit of up to $5,000 for the first 3 years of your plan related to any kind of startup or administrative costs. Now, the cost of plans can vary, but I started my cost and 100% of it is going to be covered by this tax credit for the first 3 years that I have it. If for some reason your plan costs are more than $5,000, then the max is going to be $5,000. Now, if you're a slightly bigger company with between 50 and 100 employees, then you can still get this, but you're only going to get 50% of those plan administration costs covered up to that max of $5,000. So what does this mean? Well, if you are a company with under 50 employees and you spend, let's say, $2,000 on plan startup costs and any kind of plan administration costs in a year, right? You're going to get that full $2,000 back as a reduction on your taxes. So that's a net zero to you as the business owner. And not only that, and this is even bigger, right? This is even bigger to me. You can get a tax credit for the first $1,000 that you contribute to each of your employees' plans. So if you are matching your employees, right, what they put in, you can get $1,000. If you match $1,000 of what they put in, you're going to get $1,000 tax credit per employee. Now, there are some exclusions there for owner employees, of course, and there's also an exclusion for highly compensated employees where you may not get that tax credit, but for most of your employees who are not considered highly compensated, you're going to be able to essentially give them money that the government gives you back. And the great thing is that this isn't just a one-time thing. The government is going to phase this out over a 5-year period. So the first 2 years, you get that full $1,000 max tax credit per employee. And then it's going to start going down from there. It'll go down to 75%, then 50%, then 25%, and then nothing. But again, it's going to phase out over 5 years. So you're going to be able to contribute to your employees and get tax credits for it. So what a great way to be the best employer ever and have the IRS be giving that money back to you. So all this is to say, if you've thought about doing a retirement plan but thought it would be too complex or too costly, now is the time to do it. These credits are not going to be going away. There's no set expiration on them, at least as of right now. So that's a good thing. However, you might as well go ahead and get started if this is something you've been thinking about. And thankfully, there are lots of great companies out there that can help walk you through this process, like the Run platform did for me. And if you happen to be in the market for a new payroll provider and the idea of Run powered by the ADP platform is interesting to you, then definitely check out my partner link below. And the great thing is, if you do use my partner link, you're going to get 3 months of free payroll just for signing up. Now, if you're wondering how to claim all these credits, well, you're going to want to make sure that you communicate with your tax preparer about the fact that you have opened this plan. So you're going to file, or your tax preparer is going to file, a form 8881, and that's the form that I have currently up on the screen. And this is how you would claim these credits at the end of the year. So if you are a LLC or sole proprietor, you're going to file this with your 1040. If you are an S Corp, you'll file it with your 1120S. But ultimately, this is going to get filed with wherever you file your business taxes. And I'll be sure to link this down below so that you can check it out and do your own calculation of what you may be eligible for. I'll also make sure to link the instructions to this form so that you can read those as well. Now, if you remember, I talked about a bonus tip at the beginning. So I'm going to tell you that bonus tip now, which is all about stacking credits. So you can see on this form 8881 how the top of this is going to be those startup costs that I mentioned. So again, the limit's going to be $5,000, and this is going to help you calculate how much of it you might be eligible for. But then as you scroll down, there are a few other credits that you may be eligible for. So again, this is why you want to know this before you set up your plan, because you want to set it up properly from the beginning to claim the maximum credits. So for example, the small employer auto-enrollment credit is a credit that is open to certain business owners as long as you have an auto-enrollment feature that is part of the plan. Meaning, when you set up your plan, if people are auto-enrolled instead of having to opt in, you could get an additional $500 credit stacked on top. And this one was really surprising to me too. If you are setting up a plan and you will have a military spouse that is participating in that plan, which I just happen to, okay, you're going to be eligible for even more tax credits on top of it. Again, though, there are some features you want to watch for. So as long as you set it up properly, meaning that it vests immediately and things like that, you can get another $500 for each military spouse that's an employee of yours that enrolls in the plan. Now, again, I highly, highly, highly recommend talking to a tax advisor or someone who has knowledge of these credits to make sure that you are setting it up properly and that you're going to be able to maximize your credits that you can get. Thanks for joining me. Now, before you go, if you want to see more of the behind the scenes of the Run platform that I use for my payroll, definitely check out the video that is on your screen now. Thanks for watching. Make sure to like, comment, and subscribe for more weekly videos just like this, and I'll see you next time.